I'm Bryce Butler from Access Ventures, and this is More Than Profit, a show where I talk with founders, investors, entrepreneurs, and leaders of all kinds about living and working with purpose, how they do it, and why. My guest today is Miles Lasater, and he is an investor and founder. In fact, he's one of those founders that's actually taken a company to IPO. He is the founder of Hire One and has taken those lessons into venture capital and now into the new wild, wild west of venture studios. He's the founder of Purpose Built in the Northeast, and he also has a podcast. And so if you are interested in learning more about Startups for Good, literally check out Startups for Good, his podcast. So Miles, thanks for joining me today. And I want to kick things off. Obviously, you're a founder, and you've invested, both your personal money and raised capital to invest in founders. What started you down that path of entrepreneurship? How did you get your first? What was that impetus for you?
There's probably something in the water out in San Francisco where I grew up. Thank you very much for having me on the show, by the way. I'm really glad to be a part of this and to be given the opportunity to chat with you like this. I think the other thing that contributes to my entrepreneurial journey was seeing examples. Both my parents made entrepreneurial moves. They started the yoga journal together, for example. My father started a law firm, and my mother was very entrepreneurial in her yoga teaching practice. Plus, I saw other people around me growing up, and I do think those kinds of role models make a big difference.
Yeah, that does help. I mean, especially in being in the Bay Area, I'm sure, like you said, it's in the water. I mean, having traveled out there extensively for work, there's just something about the atmosphere and just the excitement and the opportunity that I think people see is accessible. And I think accessibility to opportunity is a big thing that helps people think, oh, I actually could go do that. Where, now being in the Midwest for the last couple decades, I don't experience that as much. There's more of that's unattainable. That's not something I could go after. And so how has being an entrepreneur and kind of doing that yourself now on the investment side and even with what you're doing with Purpose Built, I have to imagine you are doing it for other than kind of financial reasons. Can you talk to me a little bit about how you went from starting a company and taking it to IPO, but then also now into your new work with Purpose Built?
Sure. I started my first business while I was in college. It was actually after I had worked at something like a venture studio. Walker Digital was the idea factory that spun out Priceline and some other companies that were not quite as big hits as that. And I remember thinking, this is amazing. I would change a few things. I would start more businesses. I would manage things differently. I have my own ideas. I want to run a venture studio one day. But I remember thinking the only way I'll have the opportunity to do that is if I start my own business and make it successful so that I'll have the money and the track record, the credibility in order to start my own venture studio. So started down that path, started the business with others I met in undergrad, and we built Hire One over the years to serve 1,600 college campuses. We had checking accounts for college students. We helped with payment of financial aid out to students, accepting tuition payments. It was a fintech business even before we were using the word fintech. A neobank, if you like, that's the current terminology for the online bank. We took that company public in 2010. The deal I made with myself going up to IPO was that I would start a business on the side. I wanted to experience what it was like to carry a business through all the way. I wanted to see what the impact was of early decisions. I wanted to operate at that scale. I wanted to see what new challenges awaited and to challenge myself. I love the beginning. I love starting businesses and I love being involved. And so I started See Click Fix was my first experience with parallel entrepreneurship. And I never went full time. I was on the board. I was nights and weekends CFO. It was before I had kids. So I actually had,
Had a little bit
extra
of time.
And loved that experience. So that was a taste of sort of mini venture studio in terms of putting together the team, helping to mentor, helping to do some of the CFO type work, raise the original money, put some of my money in. And I also knew when I started that I wanted to be moving the direction of my career more and more towards social benefit startups. And the C-Click Fix civic tech orientation was very much, oh, maybe we'll even start as a nonprofit, we thought at the beginning, and then we did a for-profit business, and I'm glad we did. So from there, the other companies that I've started and purpose-built in terms of investing has continued me along that path. And after learning how to be a VC with Kaufman Fellows and working at another VC, F Prime, I decided it was time for me to start that social benefit startup venture studio that I had been dreaming of for so long. So we are an institutional co-founder creating new businesses, new startups that are VC backable, for profit, but along the theme of economic opportunity. So where the company itself that we spin off is serving customers in a way that builds their economic opportunity and helps them thrive.
That's awesome. Now, okay, so social benefit startups. Help me understand. I mean, obviously, growing up in the Bay Area and now on the East Coast, you have a little bit more exposure, and I think a lot more experience to understand what that is. And but how did you come to an understanding of social benefit startups and why that was interesting and opportunities for both scale of impact, but also in ways that could return capital to investors? Because I think that still is a conversation many people, or a question many people have, is like, okay, well, social benefit, that's do-gooderism, and there's no real market there. So for you, how did you come to really that type of business as an area of both passion, but then also opportunity for the impact and return that I think you purpose-built around?
I think it goes back again to childhood and having an interest in startups and also having a positive impact, and seeing that those things that are taken to scale either harness the power of capitalism or tend to harness the power of government to scale. And certain solutions are better in that government realm. There are a whole bunch of solutions in the market realm that allow for scale when you are able to capture the dynamic forces of capitalism and point them towards a problem where there are positive externalities. And if you design your business model in the correct way and you think carefully about how you build in mission from the beginning. On the Startups for Good podcast, we had a guest on talking about how missionary are you and how do you bake that in to your operational processes as a company. And I'll recommend that episode. Maybe we could put in the show notes.
Yeah.
There are ways that you can reinforce it, both in your foundational documents as a company or in the way the product is designed, the brand promises that you make, the way that you operate internally, and the KPIs that you're looking at, and how you bring the team together around delivering on that positive externality or staying true to what your original problem is that you wanted to solve.
Yeah,
so I think all those things interested me. If you're asking as much about like what is my personal journey to that, it's just learning more examples and seeing people do that successfully, and more of a acceptance that it's possible and desirable even. And part of why I have the podcast Startups for Good is to share stories like that so that others can see the examples, and by the weight of examples be inspired. I hope that there is a lot of opportunity out there.
Yeah. No, and I love it, and I applaud you for it, because I do think sometimes that's the inhibitor people have, and the power of story. And what you're doing with the podcast is like, hey, wait a minute, let's actually talk to one of those founders and hear from them. And you're like, oh my gosh, that's a really fascinating business model, and yeah, I'd see a great market opportunity there. And so I think I found over the years that just those simple examples, well, okay, you may not understand the broad kind of idea of social benefit or social good businesses or impact investing, but like, let me talk to you about, this company. You've interviewed Fig, which is one of our portfolio companies, and what Jeff is building is fascinating and has a massive market opportunity. And I think that then becomes an accessible way for people to like, oh, okay, now I understand, okay, what they're building. Wow, look at that fintech play. But it's also solving a major problem related to payday lending that is so extractive in communities that are underserved.
Yeah, Fig is a great story. Really enjoyed learning from Jeff, both before and on the podcast. Their focus on a particular customer segment and doing right by them is inspiring, as is the way they've built their operation to be so lean, so self-service oriented, so technology driven that they're able to service, underwrite, or originate these loans with so few people.
Yeah, that's awesome. So help me understand, you and I have talked about this before, and I kind of wanted to, and I was excited to have you come on the podcast, because I think venture studios, like you said, they haven't been around a long time. I think in some fashions they've been around longer than people think, given your example earlier. But the kind of the new sexiness of startup studios or venture studios, but they have of a mixed bag reputation in the market. There are some out there that people would perceive as extractive of founders and not founder friendly. Help me understand, maybe even for people that are listening that maybe don't even know what a venture studio is. What is a venture studio? What is a startup studio? What is that kind of idea? And then how are you and your team doing it differently in a way that is not maybe on the extreme of how people might perceive of venture studios that have heard about them?
Well, I think people are probably familiar with venture capital fund.
Yeah.
So this is investing in existing businesses with the hope of fast growth and eventually selling those shares in an IPO or a sale of the company. That's been around for decades. People are probably familiar with that. More recent is an accelerator, it's related to incubator, but the concept of an accelerator is take an existing business, usually early, but a team is there, likely a product, maybe some customers, maybe not, and help them accelerate towards a funding event, usually. Accelerators often judge their success by getting their companies to a VC round.
Mm-hmm.
Venture studios, sometimes called startup studios, or now I've heard the new term venture creation fund, are a different category, and there are those that take the approach of building companies from scratch in-house. And that's what I mean by a venture studio when I use that term. There's sometimes different variants, but that's what we're talking about, is creating companies that don't exist. An accelerator is taking a company that does exist and helping them move towards a funding event. A venture studio is taking nothing and creating something, and hopefully, helping that company be successful. If it needs to raise money to be successful, then doing that. Where I think some venture studios are questioned, as you've alluded to, is around how much ownership is going to the team who are taking that company forward, and how much of the ownership is with the venture studio. Is that what your question is about?
Yeah, and I think, definitely around kind of the ownership share, and it may not even be that, because I do agree. I think the venture studio concept is one of co-creation. You don't have a founder that has an idea raising capital from VCs, but you have this idea of like co-building something. I think what you and I've talked about in the past, though, is what's the pathway towards reasonable ownership for that person that is carrying the vision forward, i.e. the CEO, the co-founder in a sense, or the team that's hired in as they continue to scale and function. And how do we create terms that are beneficial and founder friendly, or retain that talent as they scale and look to raise future rounds from more traditional venture firms. And so I think that's been the dance that I think I've seen in the market and people have been really wrestling with. And I think when you and I were speaking about it, there was a real intentionality, at least around, okay, how do we do that in a way where we're properly compensated as a co-creator, as a part of this team, given that it's inside of our studio, but then at the same time, how do we do it in a way that the team and the talent are properly incentivized to stay and to grow and to build?
Right. I think those are key considerations. Another consideration is, how do you set up the cap table for the business so that it's attractive to future investors and meets their expectations? So sometimes you've seen venture investors say, oh, wow, so much of this cap table is tied up with folks who will not be taking the business forward. How do I properly incentivize the team going forward? And so there have been some investors who've been questioning that and less likely to invest.
Yeah.
So you're balancing all three of those factors. The way that we've approached things at Purpose Built is we want the highest quality founders we can find. And we believe that the success of a venture studio ultimately rests on the highest quality founders. And therefore, we design our program, our systems with that in mind, thinking about that founder experience and striving to attract the best. That means making sure there's enough rewards for founders and not being greedy and taking too much of the company when you start it. That means empowering founders to be true founders rather than a general manager or a launcher or someone who's helping out with the business. Those are important factors. I think we're going to discover others as we do this more. And I'm not saying we're perfect at creating a wonderful founder experience, but it is what we're focused on and the way that we make decisions. And I think balancing those factors that you talked about, ultimately being quote unquote founder friendly or making sure the founders have enough ownership, I think unlocks value for everyone else in the value chain.
Oh yeah. And I think what I appreciate, I think over the summer when you and I were connecting and then now, is your acknowledgement, okay, how do we hold these two things in tension, right? I mean, we are co-creators. We have taken some outsized risk insofar as moving forward an idea and hiring in a team to execute against that idea. But at the same time, they're ultimately going to be the team to take it forward. So how do we balance like our role in really truly being that first mover risk capital to build this company where there should be incentive coming towards us as that studio, but at the same time and structuring in a way that the founder is incentivized properly. And I think to your point, like we collectively, the broader universe of startup studios or people thinking about this haven't really figured that out yet. But I think the great thing is that you're at least asking the questions and trying to figure out how do we do this in a way that like maybe balances those two appropriately as we move forward.
Right. And I think many venture studios, I would say, are more towards the idea-centric side of the spectrum as they think about the design of their business model. So they're thinking, oh, I want to start this business. Okay, what's the team to do it? Whereas we are coming more from the side of people-centric. Yes, we have a lot of ideas. In fact, we recently published a blog post about how we had 1,044 startup ideas in 10 months. And we laid out the process that we used and gave some fun examples, both of ideas that we like and ones we think are weird and ones we think are not very good. But we're focused on the people more than the ideas. We bring ideas to the party. We can validate them. We can come up with ideas together. But the people is what will make the success of the venture more than any particular idea.
Yeah, and actually, I literally have that blog post printed off in front of me, and we'll add it to the show notes because I thought it was your idea process was quite interesting, just the way about which you generate these ideas and the fact that you had so many of them. Can you maybe, I will obviously put it in the show notes and people can read about it, but walk us through your idea process. And then now hearing kind of the people focus, how do the people in which are a part of your startup suite, how do they dovetail into that process? What does their participation look like as you're trying to identify potential companies to carry forward to formation?
Well, we believe that quantity is important in order to get to quality. So having a lot of bad ideas actually helps you get to good ideas. I believe that people give up too early when generating options. So training your mental muscles to generate more options and more ideas helps stretch you to come up with true innovation. So we write it all down. We create rhythms and structure to help us make the time to do it. Some of the ideas come to us when we're doing other things, and we make sure to write them down. A lot of them come up during our 2-hour weekly brainstorming sessions. We'll often have a prompt. We'll have a theme that we're working on. We also have 30 plus techniques of how to have startup ideas that we use. We published 15 of them. If people are interested in the rest, they can reach out to us. And then we really go with the flow. So if a particular topic runs dry, we move to the next one. We let the energy move us, and we are thoughtful about how we manage we manage our energy. I don't think that we mentioned this in the piece, but I do my best to use that time before we do ideation to be in a more expansive mindset. I avoid detail work. We don't want to be doing accounting or some kind of detail-oriented thing right beforehand. I like to do it in the morning because I know I'm higher energy and I'm more focused. And we keep it completely separate than the rating or triage component. So we have a different time where we go through the ideas that we've come up with, and we're doing convergent thinking of like, okay, let's triage these. Which ones do we rate? And we have scoring rubrics that help us stay on track and be explicit about why we're picking one idea over another as it goes through the funnel. And all that I think is touched on in the blog post.
Yeah, it is. And I thought when I was reading through it, I thought the things that were really, really interesting were the quantity piece. And you're reminded of like growing up, like, oh, there are no bad questions, there are no bad ideas. And I think there's something to like, a time and space to just kind of free flow, and not knowing that, it might not be that idea, but it might lead you to something 10 steps down the road that actually is the idea that we carry forward. And so I think that idea to kind of have freedom to just think. And then I loved the other part where you just were talking about like different times for review analysis and ideation, which I think a lot of times people don't do well. They kind of try to cram it all into one, and then it just doesn't work. Patrick Lencioni is a writer on different types of teams and team dynamics, and he talks about like strategic meetings versus tactical meetings, and how if you put them all in the same time frame, you never get to strategy because tactics are just so overwhelming. And so I think the idea of like allowing both to have their own space in a structured kind of time-bound manner is beneficial to the process. And so I love that you actually separate those two things. And then also with that it's on your calendar, that you actually you block 2 hours with your team to get ideas flowing. That's a really, I think, simple but unique way to really get to quantity and hopefully quality through that.
Twyla Tharp has a great book called The Creative Habit. And you think, dance, choreography, this is purely creative and intuitive. She writes about how disciplined she is about the regularity of getting into the studio and starting to do the work. Some days she likes what she comes up with. Some days she doesn't, but she's going in over and over again.
Yeah. Now, you did one thing you differentiated between was as an idea, as a theme, or a problem. Can you help me understand that a little bit? Like, what do you mean by when you're doing the ideation process, the differentiating between a theme and a problem, and what you do with that?
Yeah, sometimes when we're brainstorming, we'll realize that, well, that wasn't really an idea for a business. It wasn't a solution or the core of a business model applied in a certain segment. But in fact, it was more a theme like, oh, it'd be great if we brainstormed new types of neobanks. Or a problem would be, how do you underwrite SMB, and are there new data sources that aren't being taken into account in the market today? So those are not really ideas, but they're prompts for further further brainstorming.
I'm just curious, what right now is really inspiring you as you think about 2023 and kind of what you guys are focused on within your company, but also just personally, like what is really what's really motivating to you as you look at the future, and as you think about the macro economy too, like what's going on in the markets, and this week with the elections, and still no determination there as far as where we're going. How does that impact the way you think about the work that you're doing? And maybe it does, maybe it doesn't, but does that factor into your rhythm, your team, your outlook on business and opportunities for new startup creation and jobs? And so I'm curious because, again, startups are sexy and I think really super exciting, but they can be terrifying. And in a market like this, how should people be thinking about taking that risk and stepping out and trying something different?
There's at least three questions in one there, so
figured
I'll
you could
try
handle
to
it.
Take them. Yeah, thank you. In terms of the current environment and where I see needs, I believe that we've become increasingly aware as a society over the last decade that the dream of economic opportunity does not feel accessible enough, and it feels like it's receding for some people. Now, I'm encouraged with some recent Federal Reserve data that the average low-income American has doubled their net worth, but it's not enough, and I think that there's more we can do to create opportunity and a sense of opportunity for people to improve the lives of themselves and their family. So I'm inspired by the challenge of doing that in a way that is profitable and scalable, will have real impact, and make a lot of money for everyone involved. I'm also inspired in general, I wrote about this recently on LinkedIn, by an author and the father of quantum computing, David Deutsch. His book, The Beginning of Infinity, I think is one of the most profoundly optimistic books. And one of the things he talks about in there, based on physics and philosophy arguments, is that problems are inevitable. We shouldn't expect that we're ever going to run out of problems, which as a founder whose job it is to solve problems, that means job security, right? That's exciting. But also just on a personal level, we shouldn't be surprised that when we solve one problem, it opens the next one. That's the nature of existence. But he also argues, which I think fewer people believe intuitively, is that all problems are solvable unless they're prohibited by the laws of physics. There is an answer out there, and it's an optimistic call to look for that answer, which I feel pretty deeply. And so I'm inspired by that. You asked if this is a good time to start a business with maybe higher inflation. You're hearing about layoffs at large tech companies. You're wondering about the inflation, the stock market jitters, and being down. It's going to depend on each individual situation. But there are plenty of examples of great companies that are built in true recessions and true downturns. I've started my first company in March of 2000, which was peak of the NASDAQ, and there was a VC funding winter for years after that. Started SeeClickFix essentially in the great financial crisis. So I feel like that's when I start businesses, when things seem hard. I don't know if I'm just a masochist, but I do think there's still plenty of opportunity, and it's not going to be right for everyone. But the macro environment is rarely a reason to not start a business if you're otherwise positioned to do it. If it's something that you want to do and you can identify specific customers that want what you're doing. I would be focused much more on the micro. When you're starting a business, the two things that are more likely to kill you than anything is, one, not getting started, not believing in yourself and not taking the first steps. Two is people issues. Professor Noam Wasserstein, Founder's Dilemmas, which is a great book, documents that over 60% of the reason startups fail is for people issues. So get the right founding team together and make sure that you're working on the right communication and the right agreements and the right structure to make sure you're successful on the people side. And then the other reason is you don't have enough customers. And all three of those things are way more in your control than what the Fed is doing or what the stock market is doing, et cetera. And I think founders will be surprised if they're first-time founders. It can take a while at the beginning. Things don't move quite as fast as you hope to get the first customers. People sometimes describe startups as pushing a very small snowball around, right? And you're collecting more snow as you go, and it kind of picks up momentum. But at the beginning, it can feel slow sometimes. And you may think that there are macro issues that are headwinds right now. That could change in 2 years. And that might be just as you're hitting stride, you really have your product figured out and your first few customers raving about what you're doing. And it might be the perfect time to have a startup at an early phase then. And you can't predict that now. What you can do is control, are you starting? Do you have the right team? Are you handling the people issues? And are you finding customers with a problem that want you to solve it?
If you're listening and you're a founder or investor interested in learning more about their model and ways to partner, check out purposebuilt.vc. To follow along with his podcast and the journey of founders building startups for good, check out startupsforgood.com. This is our final episode in 2022. And as always, thanks for listening. We have some exciting things planned for the new year, so to stay up to date, be sure to subscribe to More Than Profit, wherever you get your podcasts. And while you're there, drop us a review so others can find us as well. More Than Profit is a production of Access Ventures. Direction, design, and editing is done by our friends at Render, a public benefit innovation studio in Louisville, Kentucky. To learn more about their work, check out workwithrender.com. As always, I'm Bryce Butler with Access Ventures. Thanks for listening.